Welcome to the Policy Trap Explainer. Okay, I want you to imagine a scenario with me for a second. You're standing on the side of a busy highway. The air is literally thick with dust and the smell of burnt rubber. Your car? It's a mangled pile of steel. The airbags are deflated, glass is completely shattered across the asphalt, and your hands are, still shaking uncontrollably. It's a visceral, high-tension nightmare that nobody ever wants to go through. But in all that chaos, there is one single thought anchoring you. As you're staring at this wreckage, a quiet sense of relief washes over you. Because, well, you're alive, right? And even more importantly, or so you tell yourself, you have full coverage. You honestly think you're completely safe from the financial fallout of this disaster. So you take a deep breath, totally assuming your insurance company is going to step in and make you whole again. But then, weeks later, reality hits. A letter arrives from your insurance company. You rip it open, completely expecting a check that'll let you walk straight into a dealership and just buy a replacement vehicle. Instead, they're sending you a check for exactly $15,000. But wait, hold on. You owe the bank $20,000 on that car loan. The twisted metal sitting in the junkyard is entirely gone, sure, but the debt? Oh, the debt is not. You now owe a staggering $5,000 right out of your own pocket for a car that literally doesn't exist anymore. So let's dive into Section 1. The Trap, the myth of full coverage. Millions of us are actively driving right into this trap every single day, totally convinced that our standard auto policy is some sort of impenetrable financial shield. We think full coverage protects us from absolute ruin. But here's the hard truth, guys. Full coverage is a complete myth. It's really just a dangerous marketing illusion. In reality, having a policy with collision, comprehensive, and your state's minimum liability, that's usually just what banks and lenders demand to protect themselves, not you. There is no magical, all-encompassing policy legally called full coverage. The insurance adjuster doesn't care what you paid for the car, and they definitely don't care about the interest rate on your loan. They only care about one single thing, the depreciated market value. And the absolute second your car is declared a total loss, that whole illusion shatters entirely. Which brings us to Section 2, the math of ruin, the depreciation danger zone. See, while your financial life is unraveling, the insurance industry is simply following the strict, microscopic wording of your policy, paying out strictly on the depreciated value of your car. If those numbers don't match up with your bank loan, well, to them, that's just your problem. Think about the dealership purchase price compared to the instant depreciated value. The very second you drove that vehicle off the lot, its value just plummeted. If you bought a brand new car and put down a small down payment, you were driving right in the middle of the ultimate danger zone. High depreciation vehicles drop in value so incredibly fast that your monthly payments simply can't keep up with the loss. You sign a loan agreement financing a massive chunk of the car, and instantly, that gap between what the car is worth to the insurance company and what you actually owe the bank just splits wide open. And the psychological weight of this? It's huge. Your car is gone. You still need to commute to work every day, right? But you can't even get a new car loan because your credit is totally tied up paying off the total vehicle. Now, the insurance company might throw you a lifeline, but it's incredibly short. In a total loss, they might only pay for a rental car for a maximum of 7 days. Just 1 week. After that, the rental car is gone, the insurance payout falls severely short of your debt, and you are literally on your own. So, how do we fix this? Let's look at Section 3, the loophole, guaranteed asset protection. Now, what's really interesting is this hidden loophole that can actually save you, guaranteed asset protection, or as most of us know it, gap insurance. It's a mechanism so powerful that the fact it isn't legally required for every single driver is just mind-blowing to me. If you're financing a car without it, you're essentially playing Russian roulette with your savings account every time you merge onto the freeway. Gap insurance is designed specifically to cover the exact financial difference between your car's actual market value and the remaining balance on your loan or lease. It covers that exact $5,000 shortfall from our earlier scenario. It completely zeroes it out. And you might think a safety net this critical costs an absolute fortune, right? No way. Look at these numbers. The real tragedy here is that people face financial ruin over something that costs less than a single tank of gas. Travelers starts around $19 a month. Amica is highly competitive at around $20. USAA, which is widely considered the absolute best option for military members and their families, offers it for around $21 a month. But, and this is a big but, you have to be careful. The moment you're sitting in the dealership finance office, exhausted after hours of negotiating, they will absolutely try to aggressively sell you gap insurance at a massive markup. Do not blindly accept it. You are almost always better off comparing independent gap insurance companies to make sure you're getting actual value. By shopping around, you can find flexible payment plans from companies like Progressive that fit almost any budget. Okay, moving right along to Section 4, the ultimate shield, premium vehicle replacement options. Because look, even gap insurance has its limits. Sure, it leaves you with no debt, but you also have no car and no down payment for a new one. So we need to look at the industry's deepest, most heavily guarded protections. Take USAA, for example. If you add their car replacement assistance and your car gets totaled or stolen, they don't just pay the depreciated value, they pay 20% more than your car's actual cash value. That extra 20% is the crucial difference. It literally provides the funds allowing you to actually afford a new down payment and get back in the game. And farmers, they push the envelope even further with their Vehicle Replacement Plus program to attract premium clients. Just look at these steps. Step 1, your car is declared a total loss and is less than 2 model years old. Step 2, the odometer is under 24,000 miles. Step 3, they will actually pay to replace it with a brand new car of the latest model year. Let that sink in for a second. You crash a 2-year-old car, and they literally buy you a brand new one. Talk about a safety net. And actually, the coverage doesn't even stop there. If your car is older or has higher miles, farmers will replace it with a car that is 1 model year newer with 20,000 fewer miles on the odometer. And better yet, if there's an outstanding loan or lease gap, this specific coverage steps in and pays off. Other providers have amazing benefits too, for sure. Allstate has new car replacement options as an add-on. Nationwide offers a vanishing deductible benefit that shrinks your out-of-pocket costs, literally rewarding you for safe driving. These are the hidden levers of the insurance industry. But the catch? You have to actually understand the fine print and ask for these highly rated safety nets. Top insurers like Amica, USAA, and Progressive absolutely have them, but they aren't going to just hand them to you by default. So think about this. Right now, there's a number sitting on your car loan statement, and there is a much, much lower number sitting in the current market valuation of your vehicle. Every single day you drive, that invisible gap represents your profound personal financial risk. So the next time you get behind the wheel, I really want you to ask yourself, if someone runs a red light today, are you actually protected from the fallout, or are you just paying for the illusion of safety? If you found this breakdown eye-opening and want to make sure you're never caught on the wrong side of the fine print, subscribe to the Policy Trap. We're going to keep bringing you the insights you need to protect your financial future.